Thanks
With
for having me.
Lending Club, we know people basically bypass banks. Peers take on the risk, borrow, lend money online. What made you invest in this company?
Well, it's a marketplace, and the internet is enabling marketplaces in dramatic fashion. And fintech or financial services is no different. So Lending Club is effectively a NASDAQ, if you will, for consumer credit. Borrowers and lenders connect on the Lending Club platform, and they do that without having a middleman, a bank, getting in the way. So if
I need to borrow money, maybe just people that are on the internet are going to be a little bit more, let's say, understanding than a bank would be for me. But how much money do people lend typically? What's about the right size?
The average lending value is somewhere in the $12,000 range.
Okay, so it's not a huge sum of money. It's not a mortgage.
No, it's not a mortgage. Although I think marketplaces are, in fact, emerging in a way that lots of different consumer credit aspects, whether it's student loans, mortgages, other things, will in fact be enabled by marketplaces in the future.
Now, I know that Canaan is the second largest shareholder in the company.
We are
15%
one of the very first
stake,
investors.
Right? What kind of concerns do you have as far as regulation, or when you made that initial investment, were you concerned at all that there was going to be regulatory risk?
We were, but Lending Club, in fact, has been absolutely by the book in terms of regulations and regulatory compliance, filed with the SEC. They abide by, again, absolutely by the book.
Well, it's not so much really about Lending Club. It's just that I actually know investors who say, I'm not getting anywhere near fintech because it's so hard to get something off the ground, and there's tons of other sectors that don't have as much regulation, and that's just a big hassle.
Yeah, it's a very important point. You know, in the financial services arena, you can't just have technology. You have to combine that with an emphasis on regulation and regulatory compliance, and having an infrastructure to support compliance with all regulations. And that's been a core tenet of anything we invest in on the financial services side.
All right, now Lending Club is not alone now. What is the company doing? What are you helping them do, because you're on the board, to protect from fast followers?
Well, we have a really dominant position. We're almost 10 times the next nearest competitor in terms of loans originated. We'll do this year over $2 billion in loans originated, and that's up from nearly zero just a few short years ago. So we think we're in a great and dominant position in this emerging.
All right, so you're not that worried about it. You have to be worried, Dan. That's your job, is to worry.
You always worry a little bit about competition, but the reality is that Lending Club is such a dominant force that we think that it is in a clear leadership position and will stay that way.
So, Dan, I know that you sold a company. In your previous life, you were actually on the other side of the table. You're an entrepreneur, shopping.com. You sold that to eBay for north of $600 million. What about that experience prepared you to be a VC and actually prepared you to have so many fintech companies in your portfolio?
Well, the reality is being an entrepreneur, being a CEO, having run a company, having taken it from zero to 130 million in revenues and then selling it, you know, you see the movie.
It's a valuable experience.
You understand where the bad endings are potentially, and you understand where the good endings are. And my job is to try and help coach, mentor, guide in the best way possible other entrepreneurs in trying to get to a great ending.
So with that in mind, what do you prefer right now as far as the investing environment goes? Do you prefer that companies go public? Because at the end of the day, you need an exit. I mean, that's part of the business model of being a VC. Or do you think it is better for strategic partnerships or M&A deals to be made?
We always guide our companies to building the biggest possible business they can. And
so that first, don't worry about the exit at least, or maybe worry about the exit second.
Companies fundamentally are bought, not sold. So I believe, and I think we all believe at Canaan, that you want to build the biggest possible company you can. That's how we invest. We invest in big visions. We invest in big opportunities, big markets, and we invest in entrepreneurs who carry that vision with them. And it's served us very well.
So we've talked a lot about Lending Club. What else is in your portfolio that you think is going to grow, let's say, maybe quicker than some of the other ones in your portfolio?
Well, we have a number of financial services investments. ShopKeep, which is a point-of-sale system, is basically enabling merchants to take their iPad, any iPad, and use it as a command center for their entire business. So they can use it as a cash register, and in a similar way as you would with an iPad, download an app for inventory management, time management for employees, integration with QuickBooks, almost anything. So that company is doing very, very well, and we think solves a fundamental issue in the merchant arena in terms of really enabling point-of-sale management of your entire business just through an iPad.
And it sounds like that's particularly used for let's say, mid-size or smaller companies. Is that right?
That's right. That's right. Borrow is another company, Borrow.com. That's BORRO.com, Borrow without the W, which really enables you to get credit without any regard to a credit score, a traditional FICO credit score. You can get credit simply by virtue of the things that you actually own, be that watches, jewelry, wine, cars, and you can get immediate credit instantly just by virtue of owning those things that you already have in your
Just in case you need to liquidate. It's appropriate we're talking about this 5 years after the financial crisis.